Hi everyone, let's have a look at my bullish and bearish low time frame and medium time frame Elliott Wave scenarios on Bitcoin, including potential trading setup. Starting with the bullish scenario, where we are looking for a three-wave structure to the downside, which is then already finished. In the final wave, wave Y, we were then looking for a three-wave structure in an ABC, and the main reason actually why I'm looking at this wave over here to be a C wave, either in this being an ABC or the ABC that I have in the chart right here, is because of the volume. If this is a wave 3, where eventually you expect a lot more downside, you want to see volume increase. And at the moment, it's been quite stable, except for this big volume spike over here because of the news. But other than that, the volume here is not impressive. Even this move to the downside had more volume over here than this move to the downside has so far, as you can see. So yeah, not very impressed with the volume towards the downside. That's the reason why this scenario is quite interesting, where the rare target for this blue wave C is the 1.618, which we have bounced on so far, pulled from the high of X to the low of A to the high of wave B. And also we expected another move to the downside to potentially hit that support resistance area at 26K, which on the 4 hour were these candles over here, where price found resistance at this moment in time, but that now can act as support for then a potential continuation to the upside, where we then have the possible potential educational trading setup, of course, no financial advice, where one could enter. There's of course always risky and safe strat, right? You should have your own strategy, your own plan, your own entry requirements, and once all the boxes are ticked of your entry requirements, that is when you enter the trade and look for upside. But in this scenario, the risky one is to just enter, stop loss below, looking for upside. A more safer option is to wait for either a break of market structure, maybe some bullish divergences if price moves to the downside for a retracement. Maybe you want to see some bullish divergences on the CVD, RSI, MACD, whatever you like to use, for eventually more confidence that price is moving to the upside. That is by far the more safer option, because we always still have a scenario for more downside to come. Because yes, we have the support resistance area 26K. I mean, it's not the strongest. It's literally a support resistance flip. And if price would continue to the downside and take this low again, then I would be looking for the yellow target box over here between 24,850 and 24.3K. So make sure that whatever you do in this area for a potential trading scenario, make sure you stick to your plan, your strategy, and have your entry requirements ready. And only when you see what you want to see, you go in. If we then look at the bearish alternative scenario, by the way, then we are looking over here as this being an A, then we have a wave B, and then we have a wave C to the downside. So this is a 5-3-5 wave move, where inside the green wave B, we are then looking for a three-wave structure in an expanding flat, which basically means that the trading scenario over here is the same as I've just shown, the potential educational setup, because you expect a bounce in between the 1.236 and the 1.38, which is the most common target area for an expanding flat wave B, pulled from the low of A to the high of this wave A, with then over here a three-wave structure in A, three waves in B, and now you expect an impulsive structure in a wave C to the upside to then finish wave B, where an important target area for this wave C to the upside is the green 1.618 that you see over here, which is sitting at 30.7K. However, what is even more important to me actually is the triple top that we have at 30K. We have one high, two high, we have three highs over here. And you can imagine that all the people shorting in this range, either they already took profit here at the lows, of course, but most likely some stop losses are above these highs for a lot of liquidity, for then potentially a continuation to the downside after the liquidity has been grabbed, and then you get another impulsive move to the downside in a wave C. The main reason this is an alternative scenario at the moment is because of the time it takes to develop wave B. Wave B at the moment is taking quite some time. It already takes 161% of the time it took to develop wave A, which is not necessarily a problem, because wave B can take a lot longer even. But yeah, this last leg to the upside and then this potential wave B, it needs to happen, right? Like it needs to pick up. Of course, it's weekend now, so yeah, we can expect a range to form, but then next week we definitely want to see price moving to the upside swiftly, in then this being a wave B to the upside. And if we then go to the more bearish scenario, we do not expect a move to the upside. So in my opinion, if this low is going to be taken and we're not going to get a quick wick like this for more upside, like a swing failure pattern, which I think is unlikely for this low over here, but if this low is taken, more likely I'm looking for a downside where the target box has already been mentioned, which starts at 24,850 to 24.3K for the next support area. And that could fit the scenario of this being a 1, 2, and then another 1, 2, 3, and then more downside to come eventually. But I don't really like it, first of all, because of the volume, as explained, because if this is a wave 3 of a blue wave 3, you want to see volume spike to the upside, but the volume has not been very impressive at the moment. And if this is a 1, 2, 1, 2 in a 1, 2, and then another 1, 2 of a bigger wave 3, then preferably I like to see something like this. Like I like to see the second one take the low of the first wave 1, which has not happened because this high or this low of the second wave 1 is higher than the low of the first wave 1. So those are the reasons why this scenario is not a preferred scenario, and I would prefer a little bit of a move to the upside, but it is at least one that we have to keep in mind. And another one that I just like to say as a little extra, I suppose, as a little golden nugget one could say, is that if I put this on the chart for then a zigzag and I put on the log scale, one could also still think about this potentially being an ABC. Now, I don't necessarily like it. The 1-to-1 has been hit. The main reason I don't like this being an A, this a B, and then a C is because this wave B, these corrective structures, they're not very nice for ending a corrective structure over here. This structure looks to be a WXYXZ, which is not allowed to end a potential structure in a wave B, with this then being a 3-wave structure. So a WXY is the middle of something and not the end of something. So that's why I don't like this scenario. But at least we did hit the most common target area for a wave C and potentially an ABC, which is the 1-to-1 over here. But it can dip down all the way to the 1.236. And as you can see, it is quite close to the yellow target box, but still above. The rare target for a wave C, however, is all the way down there below the yellow target box at 23.7K. But honestly, if we go that low all the way down here, this is definitely not a scenario I keep in mind. And also, I don't have it in my folders. I just wanted to show you this scenario for if price is going to move to the downside. It could still go up, and still this being an ABC for then upside, right? So if we then move to the confluences, a very safe, I suppose, trading setup and scenario. No financial advice, but from an not necessarily even an Elliott Wave point of view, but more like volume range trading, as they always say, trade the range until it breaks. And sometimes you will see that price is going outside the range, but once it comes back in, it either reaches the point of control for maybe then a reversal, or, and that happens quite often, price is moving to the other side of the range. So now we have this move to the downside below the value area low of this big range that you see. Now, if price is managing to move inside this value area low, so it moves inside, backtests maybe the value area low and then moves up, that could be a very interesting potential entry for then a potential move to the upside, where the first important target, well, actually the main first one is the point of control at 28K, but also an important one is going to be 29.2K because of the value area high. And if we break that value area high, we have the triple top, and then eventually if we break through that, yeah, I mean, my next target is going to be the 2022 range highs, really, at 32.4K. But in this case, you use other tools besides Elliott Wave knowledge, right? You use other tools to come up with a potential trading plan where if price moves up, yeah, that could be an interesting entry. Yes, of course, your stop loss is going to be longer. You're not going to have a 0.1% stop loss with 100 risk to reward ratio because, you know, that's just weird and stupid. But this is at least a safer option with a little bit of a longer stop loss. But then the potential reward is still a nice, what is this, like a 1, 2, 3 or something? Yeah, it's quite good. No financial advice, but hey, it's something that I think is important to say, that even though we do Elliott Waves on the channel, you can use other tools as well to come up with potential trading scenarios and trading plans for yourself as well, right? You have your own strategy, so the only thing you have to do is stick to the strategy and also develop a strategy nonetheless. So locally, let's go to the low time frame scenarios. Not too much has happened, honestly, if we look at the range that we've been in since the morning update that I showed you guys. So what we were looking for is this then in the more bearish scenario, is this to be an ABC scenario, which is then a corrective structure. So an ABC expanding flat where the most common target for wave B has been hit very, very nicely in between the 1.236 and the 1.38. Very, very nice bounce for then a move to the upside, where the most common target for a wave C, and this then being an ABC, is actually quite big. It's the whole white box that you see, with the maximum target being the 27K target over here, 27.1K. Now, if this is a wave C though, most likely I would like to see the wave C ending over here and then a 5-wave structure, and not this whole range being part of this being a wave C. So this looks like a nice impulsive structure, but this is just more like a corrective ranging structure. However, this ABC can be part of a wave W. So that basically means that this is the first corrective structure where this range over here is going to be part of a second corrective structure in a wave X, either something like this, or of course, like it can have many different forms, taking the high again and then eventually move down. We don't know, but eventually you expect then a move to the downside in this being a wave X, for then eventually a wave Y to the upside in then a W X, Y corrective pattern, after which you then expect more downside to come, where then the yellow target box is going to be interesting. Now, a wave X can be traded to the upside for then a potential wave Y. The main problem with the wave X, however, is that the target area for X is so ridiculously big. So you have the 0.382 to the 0.886. All of these are like common targets, like they're normal targets, I suppose, for a wave X. More commonly, honestly, is the 0.5 to the 0.786. But the 0.382 and the 886 are also fine for a wave X. So it's very difficult to find a potential solid entry for a wave X. And it's therefore more important to see what price is going to do to get a little bit of an indication of what corrective structure is forming inside this wave X, to get a better idea of where the potential end of wave X might be. But if this is then a WXY, you expect more upside, so an entry somewhere, stop loss below, and then eventually wave Y is the target for then a continuation to the downside. Now we of course then again have to wait and see what price is going to do here, and also how it is coming down, right? If it's just going to fall down, because this being an ABC can also be the end of a corrective structure, after which you expect now more downside. However, if price is going to take this high, for example right now, if it's going to take this high, then in my opinion, we have more upside to go, either in this being then a WXY, or in this being a 1, 2, 3, 4, 5 for more upside, which is what I want to show you now. So then we have this being the low of something, and then this is a wave 1 to the upside, after which we get a corrective pattern, and then a wave 2, before then a continuation to the upside in a wave 3. A very interesting level for support for this wave 2 is the daily naked point of control at 26.3k, which is in between the 0.5 and the golden pocket, and also the most common target area for a wave 2 is between the 0.5 and the 0.786. So actually the daily naked point of control over here is very, very nice, as it sits in between common targets for this wave 2. Now the 0.382 and the 886 are rare targets, so usually wave 2 is not bouncing for further upside on these targets, but at least it's important to keep in mind. And for the potential trading scenario, one would then expect wave 2 to somewhere at least in the 0.5 to the 0.786 region, find a bit of a bounce for then a potential entry, stop loss below, and then a continuation to the upside. Where then again, from an Elliott Wave perspective, this could be an interesting scenario, but of course you have your own plan, strategy, and entry requirements, and one could look for a little bit of more confidence, I suppose, where maybe you want to see some bullish divergences during the retracement, CVD divergences, RSI, MACD, whatever you use, stochastic, and that might give you extra confidence for then a move to the upside, right? So I do think, once again, if price is going to take this high, it could still be a corrective structure, right? But then if price now is going to take this high over here, either now or later, I think we're in a, we expect more highs. Just like I said with the low time frame bearish scenario, that yeah, this is a wave 1. Maybe we get something like this in a wave 2. And then eventually upside in a 3, or we're just going to go pushing. I mean, you never know. But I expect for wave 2 more downside. But with the bearish scenario, as mentioned, this looks like a very nice like wave C top, and if we're going to break this high, I think it is more likely one is then going to look for a bit more downside before then another move up, not breaking this low just yet. So I think that's an important little nugget, I suppose. So we have to wait and see what price does, right? But I hope this video was helpful or valuable to you. Please check out the macro and the high time from this recent update if you are interested. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.